Today's positive trading still demonstrated that the Dow as well as the S&P 500 were having a hard time getting up through the 50-day moving average. And they did it with an indecisive trading day, the doji day. But the fact that this is the upper resistance level of a wedge formation and the 50 at the same level was good information for the candlestick investor to identify what was happening at this level. Obviously, they failed. Doesn't necessarily mean they can't get through yet, but until they do, it's got to be assumed that this wedge formation is still in progress. The NASDAQ was showing more strength. Notice how when it closed Friday right at the 50-day moving average, just above the downward trend channel, today's positive trading gapped up through that level, telling you that level was not acting as resistance anymore. There's new investor sentiment. So the fact that we have this on a breakout basis, the NASDAQ, would lead to anticipating that the Dow and S&P 500 still have some strength in it to come up through their resistance levels. Having the ability to analyze what's happening in individual commodities, for example, the futures on crude oil was up strong. It was up about $1 at one point during the day. Then it backed off, which told us that there's some profit taking going on, which was also a result of what was happening over in some of the crude oil stocks. We had been long CRZO, an oil and gas company, for quite a while. You can see how the uptrend started. We had a bobble breakout. Told us there was more upside. Today, however, notice what was happening. When it was trading up here, notice where it was in relation to the T-line. It moved a good distance away in the overbought conditions. That allows us to get ready to take profits with a very simple technique, which is moving over to the 10-minute chart. As we can see, the initial move was fairly strong. Then it started flattening out, and when it started trading back below the T-line, it told us it was time to take some profits. Even though the daily chart hadn't shown a sell signal, we knew that the 10-minute chart was going to show us, because the daily chart was so far away from the T-line, when there might be selling coming in, bringing the price back down. This is not rocket science. This is just using the correct charts to tell you what's happening in the price, whether you're a day trader, a swing trader, or a long-term investor. Using multiple charts is very simple. It allows you to take profits at the maximum points. That'll be it. We'll see you in the chat rooms.